Hello again, just over my shoulder and past the red bus is the Bank of England, and on Thursday it will hold its monthly meeting. I've been speaking to Craig Erlam from Alpari about the prospects and implications of the Bank of England and European Central Bank meetings. Let's take these central bank meetings in chronological order. Bank of England, much happening there, do you think?
I don't really think we're going to see too much here. I think we're going to keep that base rate at 0.5%, the asset purchase at 375 billion. I think there's still a lot of scepticism about how much of a difference any additional asset purchase, how much of a difference it will actually make. They've still got the funding for lending scheme, which, as you know, the Bank of England are solely behind this. They are persevering with this. We have seen a slight improvement since this funding for lending scheme started, and they are fully behind it. They do think that it is going to make a difference to the economy. And while the asset purchase, while there's so much, like say, so much scepticism surrounding the asset purchase, I do think they're just going to persevere with that. And also on top of that, we're going to find out if the UK contracted in the fourth quarter of last year towards the end of this month. So I can't really see the Bank of England making any changes to this asset purchase programme or the interest rates before we find out whether the UK did contract. I think the most interesting time is going to come next month when we do find out if they contract. If it did contract, then I think there's going to be more questions raised as to whether the Bank of England should be doing more. If we avoid contraction, even if we get a flat rate of growth, which means we won't fall into triple-dip recession in the first quarter of this year, then I think again they'll hold back, leave the asset purchase programme where it is, leave the interest rate where it is, and just really stick by this funding for lending scheme.
Again, there's not a lot expected from the ECB, but Mario Draghi is a very savvy guy. With the January rally seemingly flatlining at the moment, do you think there'll be any encouraging words from him?
I think we're going to see more of the same. This is something we've become accustomed to when watching these ECB meetings. You do tend to get just a repeat of the same script from the month before. I think we're going to reaffirm his commitment to the OMTs, still claim that they're waiting for the other countries and the other like Mario Monti in particular, or Mariano Rajoy. They're still waiting for these governments to step up and actually request this aid. Until then, they're just going to reaffirm their commitment. I can't see again any changes. We've seen a bit of a mixed bag of data throughout the Eurozone as well. We've seen like the manufacturing and construction data all showing a decline still, which is no surprise really considering the cutbacks and etc. what we are seeing in the Eurozone at the moment. But we have seen businesses and consumer surveys actually point to the upside. We're starting to see a slight improvement there. Of course, that's due to the deal that we've seen in Greece, the deal we've seen in Spain with them requesting that banking bailout, and also with the formation of this banking union. So we are seeing we saw some big strides towards the end of 2012, and that's why we're seeing this improvement in these consumer and these business surveys. So with the fact that we're seeing this mixed bag of data, and we've still a long way to go in the Eurozone with the reforms and the cuts, I don't think we're going to see any major changes yet. And I think also, again, I think there's going to be a lot of pressure on the ECB to keep that interest rate as well as the deposit rate as they are at this moment in time. They don't want to create any further inflation concerns, especially given the fact that Mario Draghi has already almost gone behind the Bundesbank's back at times. They've openly opposed what the Bundesbank their opinions are on, like, especially with the OMTs, and the fact that they've gone against them on so many occasions. I don't think they're going to go against them on this, especially when it's not really necessary. I think they're going to save a rate cut now when they start to see a gradual improvement in the Eurozone. I think that's when we are going to see a rate cut.
Just want to talk about the currency implications of all of this. You, like everyone else who I spoke to before Christmas, was telling me that if the US did go over the fiscal cliff, then the US dollar was going to appreciate. We did get a sort of solution to the fiscal cliff, at least in the short term. Yet, the few days after New Year's, the dollar appreciated anyway. Why was that?
Well, I mean, I think the difficult thing with this is we did see a fiscal cliff deal, but it wasn't a real fiscal cliff deal. It's just been pushed back to the end of February. They averted the tax hikes, but we've still got the spending cuts to discuss towards the end of February. We've still got the debt ceiling to discuss at the end of February. So the problem hasn't really been resolved. Everyone knew that we were going to avert these tax hikes in one way or another, whether we went over the cliff and then brought a bill that was going to be passed at the start of this month. Everyone really knew that these tax hikes were going to be averted. The actual issue here, the real problem with the fact that Congress can't agree on a long-term solution, this wasn't resolved, and this is what we've got to face now at the end of February. And I think that was one of the reasons why we have seen the dollar appreciate. Aside from that, we've also had these comments from the central bank, which have claimed that we may actually see the asset purchase expire even towards the end of this year. So I think that's caused a few concerns as well.
Do you think that the US dollar is maybe just changing characteristics and it's not just a case of risk on and risk off for the USD?
Potentially, maybe more towards the end of this year. Once we do start to see the Eurozone start to pick up slightly, once we start to maybe see the light at the end of the tunnel here, we may start to see that. I think at this moment in time we are still seeing the dollar as a risk-off currency, and I think the thing what we're seeing at the moment is that risk is on. If you look at the other markets as well, we are seeing very much risk is on, especially with the fact that we have got corporate earnings season kicking off today. I think there's a lot of uncertainty surrounding this corporate earnings season, so I think risk is very much on at the moment. I think that's also what's causing the dollar to remain so strong.
So leading up to the ECB and Bank of England meetings, are you expecting any major currency moves in anticipation?
I think we are going to see some choppy markets, maybe not so much in relation to these meetings. Like I say, I don't expect any change. I don't think the market expects any change. If they do surprise us, then of course we will see a lot of movement. We'll see some choppy and volatile markets. But I think markets are very much going to be reacting to the corporate earnings season right now. So I do expect some choppy markets over the next 2, 3, 4 weeks, but I don't really see it in relation to these meetings.
Well, that's all for the moment. Later this week, I'll be speaking to Miles Eakers from Savvy Trading and also catching up with the guys at ETX Capital. But for now, goodbye.